Welcome to the Real P&L Trading Show, where every week I share my real accounts, each tied to a specific trading system, so you can see exactly how each strategy performs in real time. And I share my proprietary safe wheel system for free. So that's what we're here today to do. You guys let me know here in the comments that you can hear me okay, that my audio is working. Video looks like it's working to me. All right, let's move forward. Be sure to post any questions you might have before the end of the broadcast. We're on a little bit of a delay, maybe 5-second delay. So sometimes I'll end the broadcast before you get your questions in there. I'd appreciate that. Let's talk about now the earnings edge, what happened last week with the earnings edge. Well, you can see my account here, up $14,000 on the year. Last week, I traded, let's bring the spreadsheet over here. TSM, and I made a profit of $1,512 with the earnings edge. Since my 2025 update, 3.0 update, I'm 16 wins, 2 losses. It's a 88% win rate. I don't expect the win rate to continue to be that high, but the wins are 985 and the losses are 874. So my wins are larger than my losses, and obviously my win rate is much higher than my loss. 2022, you can see how the earnings edge performed, 63 versus 19. Then 2023 underperformed by 7% nominally. 2024 didn't do quite as well, down, what is that, 20 plus 30, down pretty good compared to the S&P. And then 2025, let's take a look at how we're doing in 2025 so far. So if I look at the net lick of my account right now, it is 19,175. So I'll put that in there. 19,175. Okay, guys, you let me know that my audio and video is good. I appreciate that. All right, so yeah, 19,175. So up 216% this year. Let's see what the SPY is doing. What is it now? 629.14. So down from last week. So the S&P is up 7.45% based on SPY. Year to date, the earnings edge is up 216%. Overall, since 2022, since January 1st, 2022, earnings edge is up 283%. And the S&P is up 32% over the last, what is that? 1, 2, 3, 3.5 years, 32%. So yeah, what is that? Under 10% a year for the S&P. And you can see that the earnings edge is vastly outperforming. And even when you get on a risk-adjusted basis, it's outperforming. I mean, it is more risky than the S&P, but that's mass outperformance there. All right, let's talk about the PL5 Pro. You can see my balance was $411,899, so about $412,000 last week. Let's see what it is this week. And let me get into the correct account. So yeah, this should be it. Let's see. 418,569. 418,569. So that's did pretty well last week. So you can see here with the PL5 Pro, I started this on July 19th, 2024, this new updated system. And I did 16% during that last half of the year of 2024, where the market was up 6.65. This year, it's still down around 10.5, and the market's up 7.45. So hit a little snag with this one, had to make an adjustment to the plan, and underperforming this year. But I'm looking to catch up here, and we'll see what happens towards the end of the year. It's going to need a little more time, but you can see that the overall that I'm up about 3.5% versus the market 14.6, but my drawdowns are a lot less. So on a risk-adjusted basis, yeah, still underperforming just slightly. That is the PL5 Pro. Let's talk about the PL5. This one's specifically designed to outperform the S&P. And I use this, I trade this in a interactive brokers account because I use ES, and options on ES are pretty expensive to trade in TOS, but they're not too expensive in interactive brokers. So that's why I use interactive brokers. So let's see what my account balance is. I can't show the whole account page because it'll show my account number. So 33,278, 33,278. Up a little bit from last week. So you can see I'm up about a half percent this year. So from July 16th, 2024, when I started this particular system, last year did 10.2% versus the S&P was 3.9%. So I outperformed vastly over that 6-month period. And then so far this year, I'm up about 6.64%. The market's up 7.45. So when you look at the totals, the PL5 is up 10.93% and the S&P is up 11.69. So pretty much matching the S&P at this point. I do expect to at some point surpass the S&P. The risk adjusted basis, they're pretty even, so they will draw down together. So they're almost on a one-on-one basis. So when you see the nominal numbers here, that's giving you a pretty good risk adjusted basis, but they're pretty much even at this point from the starting point of July 16th, 2024, matching the S&P with this particular account. And this is a variant off of the PL5. All right, safe wheel. What's going on with the safe wheel? Let's take a look at the safe wheel and see what's in the account, how much money is in that particular account, so I can put it on the spreadsheet here. So let's go here. Let's look at it. Oops, that's not the right account. It's this one here. Okay. 5465. 5465. Oh, so it's down about $100 from last week. Okay, so on the safe wheel, you can see this year down 0.27%, so at break even, market up 7.45, so underperforming a little bit. I do have about half the drawdowns as the S&P, so it's less volatile. And you can see so far since 2022 up 9.3%, where the S&P is up about 32, so underperforming there. But this is a great way to learn how to trade, first of all, and it's a solid system, and it's a great way to learn how to trade where you are hedged. It's like the goal is to sell premium and be hedged at the same time. And so anytime you can learn a system like that and it's black and white rules, that's I think that's going to help you move forward with your trading eventually, because I think you're going to figure out that buying options doesn't really work well, and then you're going to figure out that you want to sell options, and then you're going to sell options, and then the market's going to crash out of nowhere, and you're going to get beat down over 50% loss on your portfolio, and you're going to realize you don't want to sell premium without being hedged, and then you're going to come here and then and this is a great learning tool. It actually makes money while you're learning how to trade and sell premium and be hedged at the same time. So and this is available for free. Link in the description. The whole course is available. I decided to make that available recently. I'm not sure how long I'm going to keep that way, but in the link in the description, you can get access to this whole course for free. Okay, so that's the safe wheel. Now I'm going to actually trade the safe wheel. I've been trading the safe wheel live since 2022. Pretty much every trade that I put on. Now I do buy these $5 calls every Friday. Other than the $5 calls that I buy every Friday, I've made every single trade live on YouTube. And you can go back through all of the archives and see every single trade that I've placed in this account. All right, so let's see what I need to do. So I'm looking at my account. First thing I want to do is make sure that my hedges are intact. So I do have this, this $5 hedge that I bought last week, and that's to hedge these long puts. I got 3 long puts. I need to protect those because if this JD goes up through the roof, I don't want to lose all of my value on my long puts. I will lose all my value on my long puts, but I will have a long call to protect me if that happens. So I'm hedging the hedge. And now the hedge itself, I have 3 questions to ask in order to know whether I need to adjust this. Number 1, do I own 200 shares? No, so I don't need to do anything about that. Is my days in trade or days left in trade under 100 days, so it will depreciate too fast? No, it won't depreciate too fast. And then the third one is the put that I'm using, is it close enough to the actual price of the underlying. So it's got to be within 70%. So it's 25 within 70% of 3132. 25 divided by 31.32. It's 79%. So it's over 70%. So I do nothing there. So there, I add all three questions here, and their answers are all no. So my put hedge is intact, and it doesn't need to be adjusted or anything. Okay, next question. After that, my hedges are intact. I run the traditional wheel. So here, I noticed I own 100 shares. So I got it signed last week, and I got in at $33. So I want to be able to sell a covered call at $33 or higher, and I want to get at least 31 cents for it. So let's see what I can and cannot get. So I'm going to go to the 33, and I want to do it in the nearest expiration that expires this Friday. So I'm going to be looking at the calls at the $33 level, and I can only get 8 or 9 cents for that. I cannot get 31 cents. I can't get enough premium. So I'm not going to sell a covered call. I'm going to add to my position almost a martingale-like situation where I'm going to double down, and I'm going to go ahead and sell out of the money put, and I'm going to possibly be assigned 200 shares. But I'm always ABC, always be collecting. I'm always collecting premium with the safe wheel. I never get stuck. That's the problem with the traditional wheel. You get stuck consistently. You know, if you use, let's say, 5 positions with the regular wheel, and or 5 stocks, eventually it might take a year, it might take 2 years, but eventually all 5 of those stocks are going to be down, and you're going to be stuck holding the bag, and you can't sell premium, and you're just sitting there with a portfolio of stocks that are all down. And that's not, I'd rather be able to sell premium every week. So that's what I'm going to do. So here is the 31 put. It's out of the money. If I could get 31 cents for this $30.50 put, I would sell that one, but I can't get enough premium. So I'm going to go to the 31, and I'm going to sell one of these, and maybe get 35 for it, 35 cents or $35, and it'll expire at the end of the week. Okay, so that filled. So now I have my wheel in place, and I'm able to own 200 shares with this wheel because I have 300 shares long put. So I can have 200 long shares against those, and this will protect those. So I'm okay going ahead and adding to my position here. I won't add a third position to it. Just this one here. So the most I'll ever own is 200 shares. Okay, so that's pretty simple. Now, as far as the sizing, if I have between $5,000 and $10,000, I'll do, first of all, a stock between $20 and $40, and then I'll also do 3 put hedges and 1 contract on the wheel. If I have between $10,000 and $15,000, I'll do 6 of these, and I'll do 2 contracts on the wheel. So for every $5,000, I can increase, I can increase it by 1. So if I had 10 to 15,000, I would be doing 9 of these and 3 of these. So I have it all sized out too. So the trade plan not only teaches you how to trade, but it also teaches you how to keep your size in check, because it's very well planned out sizing wise. Okay, so that is what's going on here with the safe wheel. Let's see if there's any questions or comments. Will says he hears me. I appreciate that. Baldy Bob says the audio and the video is good. Yeah. And Anjali says the audio works good. Let's see. Will says here, can you think of any strategy stocks that do the inverse of the S&P, even do 2 or 3 times the inverse? Oh, so you want to use a strategy involved in these SH, SDS, SP, XU. Right off the top of my head, I know I've thought of some other strategies, but right now off the top of my head, I don't really think that there's good strategies. I don't like being long these inverse or the double inverse or triple inverse because of because there's kind of like a drag if you own those. The SH, I guess, is probably not too bad to own. But as far as putting a strategy together, no, not really. I mean, the way that I like to hedge is to buy, in essence, own puts that are relatively cheap, and then they explode in value when the market comes down heavily. For example, when there were the COVID crash, SPX, there were $1 puts. They were $1 puts before the crash. During the crash, they were up to $90. So if you can find a way to own puts and you can get a lot of leverage, you just need to make sure that you're selling enough premium to cover those costs, and not only cover those costs, but also actually be profitable on top of that. So that's kind of the trick, is to be on that fine line where you can make money selling premium, but you're also hedged, but then you're also making money when you don't need your hedge. So that's kind of the tricks of the trade. That's what the PL5 and the PL5 Pro does. So rather than just trying to use the inverse to go short, I'd rather use leverage, because I don't have to. If I can use leverage, I can find a way to not have to overpay for my hedge. Will says, "Grats on your EE trades." Thank you, I appreciate that. Yep, doing quite well. This 3.0 system, quite interesting. Even the back test showed about a fifth, just over, maybe just around a 50% win rate. But the way that I exit, it's not. I mean, you can use the mechanical exit means. By all means, you can. But it's nice kind of throwing in a little bit of discretion in there, just taking the profits when you can, instead of waiting for a specific day. And it's cool to have a position on that you're waiting to make for it to hit profit, and you take it off when it hits profit. But if it doesn't hit profit, you take it off at a certain time frame. But what happens is you have all these windows of opportunities to take profit, compared to like one time when you're going to take a loss. We have all these times to take profit. So it's kind of like the odds kind of are in your favor because you can control it. And Avery says, hit the like button. Don't forget to hit the like button. And if you like the fact that I share my P&L, and I actually show my real net liquidation, and I do it every week. I mean, I've seen other instructors share their net liquidation, but it's not necessarily on a consistent basis. So you really don't know how consistent they are. And also, they don't show their equity curve, which I do every month. So if you don't see the equity curve, it doesn't really mean a lot, because they could actually add money to the account, and they could say their net liquidation is higher, but you just don't know where there could be an addition of money into the account. So what does that mean if their net lick is higher, but they put money in there? So the equity curve is key. I've realized there's a couple of people that I won't mention names right now, but that they seem to have shown some part of their P&L, and then when I ask them for their equity curve, I don't get. I can't get that. I can't get that from them. So I've seen a couple people sharing their P&L, but they're not, so far, they're not willing to share the equity curve though. So that's a little fishy to me. So I'm kind of digging deeper on a couple of those guys that kind of share their P&L, but then they don't show their equity curve. And I'm going to see if I can get their equity curves, because that's really going to prove where the rubber meets the road. And so that comes back to, if you hit the like button, we can get the word out, because my goal is to get the word out that I want this industry. I want people that sell courses or sell alert services. I want them to share their equity curve and their P&L, because I just don't think they're credible unless they do that. And I don't understand how other people think they're credible without them doing that. That just baffles me. Like, how do you buy something from somebody that doesn't share their actual track record? So I don't get it. So I want people aware of this. So if you hit the like button, that'll help people become more aware and get the word out. Okay. Any other questions or comments? All right. Before I end the session here, I always like to say, if the P&L is not real, what else are they trying to conceal? I'll be back next week.